public right now doesn't see any difference in the system, the financial system as it stands now and right before the crisis.
Yeah.
The president said it himself. We have the same exact rules that led to the near collapse. It's frustrating for people.
Yeah. It is, and we have tried using the tools that we have to move the ball forward in a number of key areas. One is on compensation. We've requested comment on whether these front-loaded compensation structures that pay a lot of money up front without regard to what kind of risk the employee may be taking over the long term, whether we should charge higher premiums for institutions that have those types of compensation structures. We've also proposed some rules on securitization structures that we will view favorably in our resolution process, because I think getting the securitization market cleaned up and functioning again in the right way, I think, is very important. So we have tried to push in the areas where we have authority to do so, and I think there are regulatory tools that we can and should be using as we work with Congress to see if we can get some statutory reforms in place as well.
Are you frustrated that it's not happening sooner? Are you
Well,
frustrated
yeah.
to see the same system in place?
I am, and I guess culturally I'm disappointed that there doesn't seem to be a cultural reawakening, especially with these large financial firms.
On
the risk taking, on the bonuses. I mean, I think it's at least those who have insured deposits, we like them to take deposits and make loans. And loans can be risky too. I don't want to suggest that, but that's a public good. It supports real economic activity. It's one of the reasons why we provide insured deposits, to provide a stable funding base for the extension of credit into communities. So, but when you see folks doing proprietary trading or the carry trade, or just borrowing low cost from the Fed and investing in mortgage-backed securities and getting that spread, I mean, that doesn't really do much for us right now. So we are seeing some of that, and that's somewhat frustrating. So I do wish culturally these financial institutions would recognize that their role really as financial intermediaries is to support the real economy, and that they owe the public a lot. All of them owe the public a lot, and to pay these outside bonuses is just really inappropriate.
Have you seen any evidence now, wrapping up this week? We just heard from Goldman Sachs, we heard from Morgan Stanley, all the major banks this week.
Right.
We know how much they've set aside, billions for bonuses, billions in compensation. Do you see any evidence that there is change brewing? It doesn't sound like it.
Well, I think we are seeing more compensation being paid out in stock. Some of it is restricted over a period of time. So we are seeing a little more than that. We're seeing a little more in terms of clawbacks, but how meaningful those are, it continues. We have a question about that. So I think there really is an issue not only about levels of compensation, which really, I would encourage boards of directors and shareholders to, because the money that's paid out is not paid out. Is not retained for the benefit of the institution, or perhaps eventually even returned to paying some dividends. So I think shareholders and boards need to be looking at this, certainly in terms of the dollar amounts. But in terms of structure, I think that the structures that provide incentives for high-risk behavior, the regulators absolutely need to be on top of it.
Well, and that's what you've called for. You've called for large financial institutions that you think are incentivizing risk-taking by offering big front-end packages in terms of compensation to pay more in terms of their fees. It's going to be a tough battle.
It is.
But you said it's not about the levels. We don't want to regulate how much they're giving out.
Well,
it's about the structure.
I really don't. I mean, I think boards of directors and shareholders, that is their responsibility. And I think those levels are something that it is very slippery slope for the government to be getting involved in that. And I think with the TARP banks, that was perhaps an exception, because they actually have government. The government was a shareholder, or is it? And some of them is a shareholder. So I think there's a differentiation there. But levels, I think I'm a capitalist at heart, and I think boards or representing shareholders should be setting the levels. I think they also should be looking at what types of, if the structures themselves incent high-risk behavior. But certainly, if you have insured deposits, it's our job as well to look at whether your compensation structures are encouraging imprudent risk-taking.
So just for the average American, give us an example of a structure that you would like to see. What does it mean to change the structure of compensation?
Well, we have that out for comment, so I don't want to sound like I'm prejudging it, because I really haven't. But I think certainly some of the academic materials and research and literature on this suggests that it's about the period of time over which the compensation is paid. It's about how much is paid in stock versus cash. And it's also about the ability to claw back. So, in other words, if a trader or other employee puts on a transaction that has a 5-year tail of risk on it, so that maybe you pay them something, but you lock it up over a 5-year period. So if year 3 there's a loss, you can claw that money back. You put it in some type of custodial account. So,
and to be fair, we're seeing some of that.
We are seeing some of that. But the triggers, I think, this is again why we're going out for comment, to get a better sense of where the industry is moving already on this. But some of the clawbacks we've looked at, even though they say they're clawed back, well, the clawback really occurs. It's not so much if you lose money, it's if you go work for a competitor, they're going to claw some money back. And so what the kind of clawback we're really interested in is actually allows you to recoup money that's been paid if you took a position that later caused your institution to lose money.